Hey, it's Jass. So last video, I feel like I had a bit of a contrived or maybe a bit of an overly specific example when talking about GexBot, the Gex ladder. And today I want to speak in a more general sense of what's going on, going through my head, what I'm thinking, how I'm planning, execution, you know, how to actually use this a little bit more practically in a broader sense. And the way I use it is very similar to volume profile. Now, for those unfamiliar with volume profile, basically you take volume transacted at each price, you aggregate it, so you get rid of the time dimension, and then you basically see where most people have been transacting and where that volume tapers off. And so, like the classic way of trading volume profile is, you're looking for the edges of the distribution, and your assumption is that, okay, well, historically, people aren't really willing to transact at these prices, and so I'm expecting it to return to where people are willing to transact. So you're looking to fade the edges, right? um, so there's a range trade, and then there's the breakout trade where you're looking for exits from these distributions, and you're looking for a traversal across low volume areas to some other node or an HVN, high volume node. So GEX is the same thing. Literally, the only difference is that these are live positions and they're not historical. So you get to see with the bird's eye view, before we reach some level, whether or not people are angling for some area or where they're positioned, as a pivot, right? So when I'm looking at this, all I'm doing in my head is segmenting positive versus negative, or call versus put gamma, right? So we have this distribution, we have a pivot here, this little put bar. I'm thinking about transition areas too, right? Where it's positive, there's one bar that's sticking out in the opposite direction. We have a small positive distribution here, and then it's mostly puts, right? And here's our majors. So ideally, or the rule of thumb generally is, okay, if we're inside some distribution, and of course there are many pivots too inside here, right? Either places to trim or to flatten. Um, these are convexity peaks, right? So, an options perspective, maybe this is where someone's hitting the belly of that curve on their contract and they're looking to take profit, right? So if you're trading futures, it might also be a good idea to trim a position. But anyway, I'm thinking, okay, so if we're in some distribution, I'm looking to take longs towards major if we're accepting into this area, right? If I'm short biased, then I'm looking for pivots, right? So I'm looking for transition areas like this and this. So either I'm looking for ranging action, then an impulse high at this put bar. I can join it and then look for continuation, short continuation, right? Or if we've already accepted into this area, there's always these local reversals, right? Local revisions where we come down to some bar, we pull back, then I'm looking for, this is my line in the sand between these two distributions where I'm hoping that, or I'm angling for a short to continue as long as we maintain this line in the sand, and then we can continue down, with generally my targets being the majors, right? So this is where either we're trimming or you're taking, your core here and then you're leaving a runner, or you're flattening, right? These are kind of like the targets effectively. And yeah, that's basically it. I think that was a little too simple maybe, but I'm going to keep making these as we go. I do have an example from today, sort of the thought process. It's really short and sweet, I promise. So today we open inside the previous day range, and immediately we see this positioning at 57, and then we see this at 230, which was also overnight high. Now, again, thinking about distributions, right? I'm seeing this bar, this put bar. This is all negative. This is all put gamma. And then there's a transition. It changes positive. There's a put bar, and then positive. Now we're inside this distribution. So I'm looking for short scalps to major, 257. And in this example, I'm actually not looking for any sort of breakthrough, so I came into this with a pretty strong short bias, but I know that did not align with the context, right? So it's a Friday. We just had a week of pretty serious selling. And generally, Fridays, you're going to see some sort of vol crush, right? You're going to see some sort of bid to cover, some sort of ramp, and some sort of ridiculous squeeze, right? So at the very most, and I can't change my bias, right? I'm bias short. I think it's fine to have a bias that doesn't align with context. It's just important to not let it get in the way of execution, right? Or to know to sit in our hands. So with that in mind, all I'm looking for are just scalps to this level. And I'm not even gonna leave a runner to go because I know it's gonna bounce. I know that it's very likely I'm gonna get stopped at break even. And even on a runner that just, it's a prone to tilt type of style, right? So all I'm doing is just taking the scalps to that level. Obviously, in hindsight, the optimal trade was, okay, well, it's probably Vol Crush Friday. We'll probably see a bunch of short covering. Just look for bids off of this level, right? Look for a long and look for that ramp to that transition level or to major positive for your runners. But at least for me, even with that context in mind, I felt like, okay, well, we had like prior day close down here, prior day low here. Very easily, we could have gone down to these levels as well, even with this positioning in the way. So it just wasn't ideal in my head to look for those longs. And when, the action was generally pretty whippy this morning, so those shorts were much quicker to pull off rather than, we did eventually ramp off of 57, but you would have been waiting there for like a fucking hour. I think like 2 hours. It was past like IB close. But yeah, I think that's it for this video. I hope that provides some value. And yeah, see you next time.